All right, everybody. Well, welcome to the podcast. It's just after Labor Day. Hope you guys all had a great long holiday weekend. Chris, did not. You? First of all, did you? How was your Labor Day?
It was great. You know what? I've got the best lake house that you could ask for. It's somebody else's lake house. So I get to show up. It's like a boat, Tom. I've got a boat and it's everybody else's best boat. But in
That's
this
the way to
case,
do it.
yeah, I get to show up for the weekend. I bring a little food. So I get to relax by a lake for the first time in a long time. How about you? I kind of know the answer, but tell people what you spent your weekend doing.
Well, I mean, last week, we did this early because of the hurricane that came in, and the brunt of the storm went past us. But we were not without some problems. My problems came. We had power outages well before the storm got here. Then the power kicked back on. We had the power during the storm. Then I started having problems that were happening. My gate wasn't working at the front of the house. I lost low-level lighting. Turned out we spent the weekend all the way up into Monday night trying to fix this thing. And what we determined was that ants had been chewing on the wire and chewing on some of these fire ants, some of these ants here, these Florida ants, they love insulation.
Yep.
And between that and the guy whoever put the gate in, they didn't use the right wire. So we had to get all that changed out. Lights, I mean, high voltage lights, low voltage lights, and just literally the front yard was dark for a couple days. We got it working late Monday night. Now, Chris, all of this while we had kind of back-to-back Labor Day barbecues going on at our house. So I ran inside. My brother and I got to go inside a few times for a piece of chicken or a burger or whatever. But man, I'm telling you, it was a rough weekend. So I'm glad yours was good. And I hope all of you that are watching the program here, yours was good as well. We're going to do a couple of things today. Let me throw something up on the screen there. There's our plan for today. September pullback. All right. We're going to talk about that a little bit more. Also, what's happening with recent news. And Chris is going to share some recent news with you. And then I thought what we do is we take a look at a couple of stocks, or we talk about when is best to buy stocks and when is it really best to do options in place of stocks. And I thought September would be a great month to discuss this, Chris, because let's get right into it. I mean, last week, if you guys were with us last week, before I shut everything down, before I pulled all the furniture in, the outdoor furniture in, before I prepped, we were talking about prepping for September, and September being a pullback month. Now, forget what happens before Labor Day. This is all supposed to start happening now and really into the next couple weeks. So, when you look at what's happened in the last week, it was kind of we kind of had a mixed week last week, but I believe we actually ended on an up note, at least stocks that I'm involved in did. Chris, let's, again, what's your feelings about the rest of September and maybe some news that you were looking at that might either confirm or even contradict this season?
Yeah, it's going to contradict it a little bit, Tom. We all know September is that 1 month it's the worst. When you look at the data, and you and I both love to look at data for the market because it doesn't have emotion. It doesn't say I think, it doesn't say I hope. It just says this is what it is. When you look at the data, September and August are the worst 2 months of the year. Everybody feels like it's October, but October is that anomaly month. You've got so many days that are Black Monday, Black Friday. So people are afraid of October, and it's got, its catches to it. But man, September just really stinks for the market.
Well, also, Chris, you know what? I want to mention something else too. People think about October being the worst month because that's when the market's actually down from the moves that happened in September.
Exactly.
That's when you start hearing about it. And that's the best month to be a contrarian and step in and start buying.
Right.
Because I didn't want to interrupt you, but I want to
that's a very good point.
Keep hearing about October is because that's when the lows, if they're going to occur, they go through September, and then all of a sudden everybody starts worrying about October. They see the end of September, month. They see that month end, and that's what
Right.
gets worried.
Right. And it's funny because, Tom, we're in the first trading day, as you and I are talking right now, the first trading day of September. And I look over here and the small cap Russell 2000 is down 1.6%. The NASDAQ is up just a little bit. The Dow, the spider there down. And people will say, oh, here it goes. And I will say that one data point, like one day, is just that. It's a point. 2 days is a straight line. After 3 or 4, it starts to turn into a trend. And September seasonality happens because of this. I mean, it's people's minds. It's
Yeah.
that, oh, it really is the worst month. And there's something to the fact that earnings season's over. There aren't that many catalysts out there. So that helps stock do this slide, but it's going to turn into a little more of a self-fulfilling move. When I look at some of the sectors that are down today, yeah, we're setting ourselves up for it. You know what? I thought it was very interesting last week when we were talking and you pulled up your money calendar and you've got that strip that week, the third week of the month that was just all red, 94 and 96%, red, and how that cues up with the Fed, because that's when we're going to hear from the Fed.
That's right.
Man, I think your money calendar, even though it's looking at the history and you don't have the Fed that's lined up with that week every year, but I think that's the story of the tape that people need to watch right now, is that third week is going to be the one that really reaches up, and it's the turf monster, call it, week. It's really going to reach up and trip stocks up regardless of what's going on.
Yeah, I'm with you on that. And so now, what's this piece of news that you want to share with everybody that might counteract this month?
Well, you know what? Everybody's been worried about the recession. We've been talking about a recession for the last year. And, both of us are deeply rooted in contrarian viewpoints on the market. And this is kind of that everybody's been looking for it and it hasn't happened. Is this going to be one of the biggest contrarian plays out there? Well, Goldman Sachs came out yesterday and told everybody that they are dropping their forecast for the United States to slip into a recession. They were around 25% or so, if you recall. Now they're dropping it down to a 15% chance that we fall into a recession. They are one of many banks that have been kind of backing off of that view that the market is going to go into a recession. And it's interesting. Yeah, the Fed, everybody, all of these banks, all of the, let's call them the academics out there, all the professors that you see on CNBC, we're talking about how the Fed is going to ruin this market and they're going to absolutely plunge us into a recession or worse. And now it's starting to look like maybe they're going to thread the needle a little bit, or at least that's what the banks are thinking. I've got a concern here, Tom. You tell me if you share it. And it goes to that contrarian side. There are a lot of things out there that are still tripping points for this market. Inflation is still relatively high. It's not 9%, but it's 4%, 4%. People are slowing down on their spending right now. They're feeling the pinch a little bit. We're starting to see unemployment go up a little bit. We got that in the jobs report on Friday. If everybody all of a sudden says, let's party like it's 1999 and there is not going to be a recession, could this be the thing that if one does start to pop its head up, everybody freaks out and goes, oh my gosh, now we need to? What's your thought on that? The long-term contrarian.
I'm more of a, I'm more of a contrarian investor, and I'm more of a like a breakout buyer. Kind of gets into that. With stocks, when is it best to buy stocks? When is it best to trade options instead? I try to let opinion, first of all, I try to check opinion at the door,
right?
Because it doesn't, even some of the smartest guys out there get it wrong. Who's the guy from Double Line Capital?
Gunlocker.
Yeah. A smart guy,
Yeah.
really smart guy, really got it wrong. Shorting, not only right out of COVID, but then even recently, he's been shorting it pretty much. He's been shorting the equities for the better part of this year. And
Right.
I mean, he hasn't been really wrong, but he was in the first quarter. So, I try to continue to tell myself, forget everybody's opinions, mute mainstream media. When someone's talking, mute it, and use it for what you think you need it for, which is news. I actually kind of like Bloomberg better because they shove all the news over on the right hand side. And if you really want to mute, if you really want to take an old school method of checking opinion at the door, just take a big piece of cardboard and tape up the left side of the TV. Then the right side of TV, all you're seeing is just the Bloomberg headlines, which is actual news for the most part.
I like that approach.
That's the first thing. You check that opinion at the door. And then news. You got to be careful with news too, because news is chock full of a lot of, it's opinion disguised as news.
Right.
We see that too. But I try to be as objective as I possibly can. Meaning, as an investor, I want to be a contrarian. Like, I'm looking at Disney, and you and I've been looking at Disney been talking about this a lot. And what's the news now with ESPN that I keep seeing? Is ESPN on the block, the auction block?
Right.
But Disney's a smart company. I think they realize, there's some conservatives that are talking about them being woke. It's kind of, to me, it's all in the numbers. And the numbers to me aren't what a movie did on the weekend, because we've seen movies, we've seen Marvel have blockbuster movies and then parent companies down that Monday. So you can't go thinking about long-term stocks just by how the box office movie for the weekend did. It's much more than that. So I look at, like I said, if it's long-term, I take a contrarian investor view. And if it's short-term, then I will use an objective rules-based trader view. That's the way I like to play it. So you and I are talking about September.
Yes.
Right? September to me is a trader's month. October and on is an investor's season. Yep. So, when we talk about when is it time to buy stocks and when is it time to buy options, let's talk about the options first. Because when I look at the money calendar, and we did this last week, but let's do a little exercise. So last week, I think we talked about Marriott. If I'm not mistaken, Marriott was one of the things we were looking at. But, we also were talking about maybe some bears. The biggest bear that I see on the screen right now that has just insane bearish power to the downside is American Tower. The symbol is AMT. And so let me kind of throw it up here for the traders that are watching the podcast. When I look at the top, like the top 5 bears, the way that I like to sort them out, AMT is on there, OLED is on there as well. Sienna and Waste Management are the biggies that I see that are on there. But boy, that AMT really sits up at the top. And if all of you, home gamers want to take a look at a chart of AMT, put AMT on your screen, go back and take a look at it for year to date. And, I'll play along with you and I'll tell you what I'm seeing on my other screen. So year to date, we're down about 15%. Okay. Even the last 3 months, we're down over 5%. Over a year, if you go year to year, you're down 27%. Some of you might be saying, well, how much lower can it go? A lot of folks said that about Disney. My brother-in-law is saying that about Allegiant Air, because, he lives down in the Punta Gorda region of Florida, and Allegiant's building a really big resort down there where they could fly people in, stay at the resort. The news came out, Chris, that they're paying $100,000 bonuses to people that come on board as employees. Would that raise your eyebrow?
Come on.
You and I need to be some fry cooks down there.
Yeah.
But when you dive into the details, it's spread out over 10 years. So you got to be there 10 years to get the full $100,000. And here's the other thing. You and I both know that's baked in and coming out of whatever it's part of the pay package.
Oh, yeah.
So it's not attracting. It attracted a lot of applicants right away. And then a lot of people went, maybe not. And so, there's that. But here's the thing. And then kind of going back to opinion. He's looking at this. He's like, it's low enough. It's low enough. It was 135. Now it's 115. Now it's in the 80s. He owns it at 115. And I told him, I said, Dondi, That's his Italian name. Dondi. I said, you got a lesson that everybody in the market learns, and that is you got emotional because this thing's in your backyard. You see all this stuff going on, but you got to realize that the stock market doesn't move logically. It's anything but logical. And so he's like, well, when should it be a buy? I said, well, when interest rates stop going up, when we
Yep.
start to flip flop that, then it's gonna, that's more of discretionary. And if the consumer's tightening their belt, it's gonna affect airlines. It's going to affect resorts. And
Right.
you happen to own a stock that deals with both. Now, let's talk about American Tower for a moment. You don't even have to know what American Tower does as as a trader. You look at the chart. The chart took a big dump last year. Then it recovered. And then it's been, let's call it the last 9 months, the year to date numbers. It's just been in kind of this slow burn to the downside. And it's in a channel to the downside. So, we're at like 182-ish as we speak. The low was 175. Could it go back down there and double bottom again? Chances are. Okay, let's add some rules-based trading on top of that, Chris. So the money calendar says, well, AMT is seasonally the last 10 years in a row. This stock has moved down during the month of September. Last 10 years in a row, Chris, there was no loser. I looked. Last year, this thing dropped about 45 points, but during the month of September. So, I mean, wow. And we're talking about a stock that went from, now, back then the stock was at $265 and it dropped all the way down to close to 210. The stock's at 181 right now. Now, I don't expect I really don't see it dropping 45 points. I don't see it dropping 25 points. But if it drops 10 points, okay. So you talk about, we put it up at the beginning of the show. When's it best to buy stocks? When it's best to buy options? Well, you can't buy a stock when you think it's going down. You could short it.
Yep.
But that has its own inherent risks. The risks reward ratio on shorting a stock is you have unlimited upside risk. You have limited downside reward because zero is as far as it can fall. And very few stocks fall to zero, especially stocks within a 30-day time period. So that brings up stocks or options. And with bearish opportunities, it makes so much more sense in my mind to buy put options or create put spreads or do something where you have limited downside risk if you believe that that AMT is going to take another run down to 175.
Yep. I'm on the same exact page with you, Tom. It is as you said, I mean, who you've gotten a margin call before, right?
Oh yeah. Yeah. When I got my last margin call, it was a while ago, but it was just after Black Monday, 1987.
Mm.
I took my margin call on the next Tuesday.
Yeah.
And that was rough. And I was 22 years old.
Yeah.
No. Yeah, 22 years old. I got my first and last margin call. Yikes.
If anything, that is the one thing that I've had one margin call. And from that point on, it was, you know what? I need to make certain that I'm not going to get in that situation again. For those of you that don't know out there what happens, they basically say, your broker says, hey, we need a check right now, today.
They do.
Before 5 o'clock. Let's go. And with put options, you don't get that margin call because your amount is limited. You're fighting, if you will, the tape of that 20% margin. So there, in that one reason alone, is one of the reasons I always prefer a put option over just trying to short a stock on margin in my account.
So folks, take a look at the stock. Okay, stock's just north of 180. That's AMT.
Yep.
I mean, I already know if you were to buy 100 shares of this stock, you're going to be paying $18,000. So I think it's safe to say if you're going to short this stock, they're going to want at least $18,000 for 100 shares of the short stock in case you're wrong. So there is what's going to collectively be set aside, right? Because the broker's no dummy. The broker's going to say, you know what? Yeah, we'll let you short it if we can find it. If we can find it to borrow so that we can allow you to sell it on your behalf. So that's the one thing. You've got you have high margin, higher margin, sometimes higher than that on certain stocks.
Mm-hmm.
But let's just say that there's not a huge borrow on this. There probably isn't because it's American Tower. It's not a meme stock. But if it's hard to borrow, then they're going to charge you additional fees. So if you're going to borrow stock from someone to short, okay, first you got margin you got to put up. Then you got, of course, commissions. You got to pay commissions when you sell short something, but you're also going to be paying an interest rate charge for borrowing the stock.
Yep.
Guess what? The interest rates are higher now than they were last year, a lot higher. I don't even know what interest rates are on shorting stock because I haven't shorted stock in so long, Chris.
Yep. Same here.
I mean, why do that? Why put $18,000 on the sidelines and being charged interest on that 18,000 as well? When you could do this trade, you could just buy the at the money puts with an October expiration, and you're paying about $550 to control $18,000 worth of stock. But you can even get cheaper just by doing a spread. The spread costs less than $200. And I'm talking about like the 180, 175 put spread.
Okay.
And so as of this podcast, it's trading for $190. So you have $190 entry debit, but you got a maximum profit of $310. That's 163% reward to risk ratio, max profit over max risk. You cannot get 163% reward when you short a stock. The best you can get is 100%. And you know what the stock's got to do to get to 100%? It's got to go to zero. So you'd have to get negative. The stock would have to go negative for you to get that same kind of reward. So that, folks, is the reason to trade options over stock. If you're looking at it as a trader, long or short, you have a predetermined amount of time, and to me, it's got to be like months. I mean, you're not gonna have any tax advantage shorting a stock and buying it back a month later. So, there's just too many reasons why right now I would look at options on the shorter term type of trades. Now, Chris, I know we're going to have this conversation in October, but let's talk a little bit about October. I mean, is it back up to truck month? Or is it start to put your toes in the sand or put your toes in the water month?
I think we'll call it a Zach Brown band. It's toes in the sand. You start to dabble, is my opinion here, Tom. Think about the pullbacks that we've seen over the last year. And there's one particular group of stocks that has been extremely resilient whenever they've seen a 10 or 15, 20% pullback. And that is that Magnificent Seven group. Your Amazon, your Google, Apple. Apple's been struggling here. And I think people forget that Apple is a behemoth in terms of what they bring in terms of revenue. And of course, they're going to launch a new phone here in a couple of weeks, which will add a little flair. But I think when you look at that group of stocks, Tom, maybe you dabble a little bit earlier in picking your prices. And that is, you said something key early, and I think you need to say it, and you preach it to people, and it's worth listening over and over. Having rules-based approach. So my rules-based approach for going into a month or a period where I know I'm going to see a lot of volatility is to sit down when you're not in the middle of that dogfight and to figure out, where do I want to buy Apple? Where do I want to buy Amazon? Where do I want to buy Alphabet? Alphabet's at $135. I don't know if it pulls back that much further from that, but I can tell you, if Nvidia, the hottest stock in the market, hits $450 or $420, I want to be ready. So to go to your point on rules based, and I love that you always come back to that, folks, sit down right now, early September, before all the headlines are going and all the volatility is going, and figure out your prices. You could sell puts when you name your price, you could do all different types of things. But the one thing you'll do is save your nerves and sit. Tom, I think all of us have done this. When you sit there and look at the market and go, "Oh my gosh, is this the bottom? Should I be buying today? Should I back the truck up?" You can do that work right now when you're not forced by, "Oh my gosh, the market closes in 5 minutes. What should I
Yeah,
buy?"
yeah, yeah. And you know what? You mentioned something that's interesting to talk about real quick. So let's talk about Apple real quick.
Yeah.
Because, every September 11th or 12th of every year, they have the big reveal. This one's going to be the iPhone 15.
Right.
I think Apple could sneak something else in there that we don't know about. But this is another one of those buy the rumor, sell the news. Buy
Yep.
the hype, sell before the event. So I mean, if I were looking at Apple as a trade, and I was going to look at, let's not say I think it's going up. Let's go back and research every September with Apple and see if there's a pattern on Apple every September. And I can tell you real quick, what goes on with Apple. I'm actually going to go in and I'm just going to look at the actual stock itself. So, and we'll do a kind of a look back over the course of, let's say 10 years.
Mhm.
And let's see what happens, even just, starting the beginning of September. And here's the thing. When you look out past the next 5 days, Apple goes down.
Yes.
And the reason why is they see it, you might get that little bit of uptick in the beginning few days, but then
Mhm.
after that, it starts a dropping. And that's because of that whole sell the event.
Yep.
I'm looking, it's right here on my screen. And it's 71%. It's not 90%. It's not a 90% chance. It's
Right.
like in the 70s. It's all 71% over the last the last I have the last 7 years on here. Let me throw up the last 10 years and just check it again. Yeah, 70%. 70%. Seven of the last 10 years, Apple's gone down. 3 of the last 10 years, Apple's actually gone
Mhm.
up. So it's more slated to the downside, and it's basically what, if I'm looking at the entire month of September, most of this happens after the first week. So just keep
Yep.
that in mind.
You know what the other thing is special about Apple? You hit it. You sell the news on Apple when they have these events. But if you look at October, July and October are the best months. Number 1 and 2, July and October for Apple stock over the last 10 years, over the last 20 years. So that's one of those things where, we talk about October. It's up on average 5% for the month of
Yep.
October over the last 10 years. And that's
Yeah.
78% of the time it's up. That's
Mm.
mind-boggling, Tom. So
Yeah.
people, if they see that sell the news and they're going to go, "Oh, well, I guess that new iPhone 15 isn't the bee's knees and the market doesn't." It takes a little bit for that to settle in, and there's a lot of people that take profits off of that by selling news. So,
So
but
before we roll out of here, Chris, I
yes.
thought I would tease everybody with what I'm starting to dig into and look at when October rolls around.
Mhm.
It's the first full week of September here, and we're already talking about October. I just want to prepare everybody for some of the stuff that I see on the patterns. Now, this was last year, so I'd have to take a look at the last 10 years. The last 10 years, some of the stuff I'm seeing popping up, technology.
Mhm.
You got like Lamb Research and Adobe have some really nice moves to the upside. I see healthcare companies like Anthem, United Healthcare is on the screen too. But you know what's near the top? BlackRock, Goldman Sachs, JP Morgan.
Mhm.
Those are the big ones that I'm seeing that are coming up as well. So there's a I'm so you got folks, you got technology, you got healthcare, you got finance. All of those have on average 9 in the last 10 years. All of those have gone up. Goldman Sachs 10 out of 10. All right. I mean, boom. JP
Yeah.
Morgan 9 out of 10. Let's see, where's my other one? BlackRock 9 out of 10. And Goldman's looking rather interesting too, because they've been kind of cut up a little bit to the downside. It's interesting to see what their seasonal is going to do. But yeah,
I tell you what, on that whole thing, the financials coming out of this, if we do have and you know how I feel about the regionals, I think there's some risk there. But if we do have some sort of event from the Fed in that October 20 meeting where they do kind of plant a flag of victory over the recession, wow, the financials
Yep.
will really start to take off.
Bye-bye. Yeah,
Yeah, they'll be gone.
absolutely.
Yep.
All right, Chris. Well, thank you for joining. Guys, hope you enjoyed the rest of this short week that we have, the short week of trading. And we'll be back again, same time, roughly next week. Bye, everyone.
We'll see.